Thank you. Thank you. Number 11, please. Good morning. Thank you to Gary and to Craig. My name is George Abernathy. I am with FreightWaves, and I am excited to be with you this morning, and we'll try to keep the energy going from that extraordinarily interesting conversation. For those of you who are sonar users, 10 o'clock Eastern time every day is something that you look forward to with bated breath. There's a Pavlovian-like response that you start to salivate when 10 o'clock is coming because you know that the FreightWaves market experts are going to be providing you with your daily watch. So, in keeping with our tradition that we have done previously, we're going to have the daily watch provided to all of you. So even if you're not yet a Sonar subscriber, you will get to see over the next 3 days a live edition of the Daily Watch. Now, what you're also going to realize if you do already subscribe and receive the Daily Watch, not every one of our market experts is particularly good or doesn't hold brevity as one of their core competencies. Today, they have to be brief. The countdown clock for each of them, I've got 9 of them, so we've got a batting order of superstars like we do in baseball. My batting order today, they each have a countdown clock of 1 minute. Very much in the way that we're going to be doing demos at 7 minutes. At the end of 7 minutes, the bell goes off, the lights go down, and you are out of here. Well, our market experts only have 1 minute. So, teeing it up for us in the leadoff position, crikey, it's our Chief Insights Officer, Dean Croak, who's going to be providing the Sonar shipper perspective for today. Dean?
Thanks, George. Good morning, everybody. Having spent about a third of my life sitting on loading docks, waiting to unload and load, I thought I'd focus on the Augusta, Maine market this morning, which is a particularly difficult market for shippers and carriers, but nonetheless very strategic. It's a geographically challenged market. There's very few truck stops. The enforcement is incredibly aggressive. There's a lot of distance between shippers. It's a real dilemma for all the capacity that ends up in the inbound freight market in Boston, which is where a lot of the trucks come from for the Maine market. The last 2 weeks is an interesting example. As you can see from the chart here, what you'll see is that the outbound tender volume has jumped about 69% in the last 2 weeks. And at the same time, the outbound tender rejection rate has tripled because carriers have got more attractive rates further to the southwest in Harrisburg and Allentown, so there's less attractiveness to run north. In response, shippers have doubled the tender lead time from 1.7 to 3 days to try and attract carriers. So literally this morning, carriers have got a real dilemma, and so do shippers. Do they deadhead southwest for 4 hours, or do they run north into Maine for marginal rates and lose a whole day in the process?
Whoa, right under the wire. Well done. Well done, Professor Croak. All right, batting in the 2-hole for us. Coming out of Chattanooga, Tennessee. Zach Strickland has 15 years of experience working in transportation as an engineer, pricing manager, and he uses that along with Sonar to provide content and guidance to the asset-based carriers. Zach.
All right, so it's that time of year. Most of the time, carriers do not like to go into Florida, a consummate black hole for trucks to go in and never come out. But over the last couple of weeks, we've been watching the reefer tender rejection index climb steadily, about 300 basis points in the last week itself. Volumes are actually up about 4% week over week as well. So it's a good time for carriers to go into Florida if they have to, especially the reefer carriers, because they're going to get a lot better odds of getting out of that market. Something we're also watching is the rate coming from, the agricultural rate coming from Lakeland to Chicago has gone up about 33% over the last week as well. So now's the time that carriers can go into the Florida market, grab a quick spot load, make some extra money.
Thank you, Zach. Well done. Particularly with the flashing stuff. That was really well done. Thank you. All right, so your 3-batter has to be able to hit all fields. Got to have some power, but he's got to be able to hit for a high batting average. So this guy is in here because he really comes with it every day, and he brings a lot of insight to the non-asset side. Donnie has another of our assets who has over 15 years of transportation perspective in logistics. And so with our intermediary perspective, Donnie Gilbert.
Thank you, George. So I brought our reefer tender rejection map. And this map helps measure the willingness for reefer carriers to accept loads in each region. So we measure this by the actual way if they reject a load. And when carriers normally reject a load, it's because they have better options in that market. Here we have a map that shows all 135 of our markets. As tender rejections are low, that means the options in those markets are a whole lot less. As they increase, their options in that market increase. We know one of the number one reasons that a carrier would reject a load is because they are offered a better rate. So looking at the map, the shades, the lighter blues are the smaller percentages, and as it gets darker, those are the higher percentages of the tender rejections. So as a broker's perspective, we know that in the regions that are darker blue, we're going to have to carry a better rate. In the lighter blues, smaller rate.
Well done, Donnie. Right at the wire. Well done. Thank you. Thanks, Donnie. So you saw and can see that blue has a lot to do with Transparency19. Make sure that when you see one of the sonar folk, make sure you ask them, what does that really mean? Why are we chasing blue? Why are we showing that blue is the new black and you need to go blue to blue? So let me move over now to the cleanup hitter, Anthony Smith. Anthony is an economist for FreightWaves and a market expert in the housing and construction area. And he uses sonar to be able to look at the construction industry and obviously how housing has such a significant impact on the freight industry. Anthony.
Thank you. Today we're looking at the Institute of Supply Management ISM Non-Manufacturers Index. This is essentially looking at the service side of the economy. What we're seeing right now is the latest number was a 55.5. Now this being a survey-based index, there's a baseline of 50. Anything below 50 means that there's contraction, while above means that is indicative of growth within the survey respondents. Within the respondents, we see that there is optimism on the service side of the economy, and this is something to be somewhat happy about going forward. Within that, there was some hesitancy within the employment side with the respondents saying that there has been difficulties with hiring and retaining employees. This is, I think, going to be an ongoing trend in the overall economy, as many of you have probably seen the latest job numbers. But overall, there's a lot to be excited about for the U.S. economy going forward on the service side. Thank you.
Thank you, Anthony. Well done. Thank you. Now we're going to turn to obviously an extraordinarily important commodity in the freight industry, to oil. John Kingston has been covering commodities for 40 years and has been watching oil since 1985. And with more than a 30-year career at Platts and S&P Global. But the highlight of his distinguished, extraordinary career is to share the microphone every Saturday on 146, hard-coded in my car, on Sirius XM, FreightWaves Radio from 3 to 5 every Saturday, 3 to 5 Eastern Time. John Kingston.
And it is a highlight, thank you. I can't imagine by now that nobody has heard of IMO 2020. It's a regulation regarding the sulfur content in marine fuels that has the very big potential to kick back into the diesel market. And if you want to know why, we'll meet at the market experts place outside and we'll talk about it some more. If there's going to be a reaction to it, what you're going to see is diesel is going to move first. You won't see diesel and crude move at the same time. So this chart in Sonar is an indication of what's going on. The green line is the price of WTI, which is the U.S. benchmark for crude, and the mountain area is the rack price, the wholesale rack price for ultra-low sulfur diesel. As you can see, there has not been any indication yet that there has been movement. There are other signs in the market in the terms of some grades of crude that there's movement, but there is nothing yet in the price of diesel relative to the price of crude that indicates the market is getting concerned. This is the same way with the price of Brent. Keep your eye on this spread. It's going to be the one that's going to be a signal that there's problems ahead.
Thank you, John. Much appreciated. So as the Sonar community knows, you've seen an extraordinary expansion of the data types, and the modes that Sonar has deep data inside and analytics and indices that we are providing. Mike O'Brien has joined us as a market expert for us in intermodal. Mike's got 25 years in both the transportation industry, both in truck and in intermodal, and has built intermodal enterprises at multiple asset players. Mike O'Brien.
It's good to be here. Today we're going to look at what's happening to TOFC traffic, our good old trailer on flat car. The indices we're using for today is the RTOIC, which is rail traffic originated by containers. That's in the green, overlaid with RTOIT, rail traffic originated by trailers. As you can see, there's normally a super strong correlation as they rise and fall. I mean, if we push that chart way back, they would be together. But if you see in the last 4 or 5 weeks, that trailer volume is sliding big time. And with the trailers and the containers, that makes up all of domestic intermodal traffic. So that's a key indicator. Even though the trailer volume is much smaller in container, it can still hurt the overall volume. There's 2 theories, and I think they actually go together. This year, the railroads cut a lot of TOFC lanes because they weren't efficient.
Oh, thanks, Mike. Finally had a victim. Okay, thank you, Mike. Much appreciated. So oftentimes in baseball, unless you happen to be a Red Sox fan, the bottom of the order is not as strong as the top of the order. But for those of us who are Red Sox fans and understand the market experts, the 3 that are coming your way are extraordinarily strong. Again, the expansion of the data in sonar is significant. Jesse Cohen has over 30 years in air cargo. You wouldn't think from some of the things that we talk about around diesel fuel being in our veins and asset-based land transportation that we would be as significant in air cargo as we are. But Jesse's going to show you just how significant it is. Jesse?
Thanks, George. Air cargo is a leading indicator for the health of the global economy and international trade. After 2 strong years, the air cargo industry is seeing a weaker trend this year. Volumes are off 3.1% through the first quarter. The sonar charts here cover air cargo rate trends in 2 major markets, Hong Kong to North America in the purple, and Frankfurt to North America in the orange. In 2018, we saw the run-up of both ocean rates and air rates from Hong Kong and China, with importers trying to beat potentially higher tariffs, though traffic out of Hong Kong and China is softer now and more normal seasonally. For the US and Europe, even with multiple trade and tariff threats, we're seeing softer demand compounded by extra summer passenger transatlantic flights and capacity. There's no beat the tariffs rate push yet on the air cargo side. In fact, rates from Germany have dropped about 15% year over year. That's an opportunity for buyers and forwarders to ensure that they get some favorable air cargo rates this summer and into the fall.
Well done. Thank you, Jesse. Our market expert for international freight forwarding and maritime, is there some way I can actually, well, I'm going to stand over here because then I won't look nearly as short as I will standing that close to Henry. Henry Byers has joined us after nearly a decade in both domestic and international, and again, the breadth of what sonar data has and all of the impacting modes of freight I think are going to be well demonstrated by what Henry's going to be able to tell us on the international maritime side. Henry?
Yeah, what I have pulled up here, George, is the Freightos Baltic Index, which represents pricing for a 40-foot container across 12 different trade lanes within Sonar. Today, of course, the trade lane to watch is China to the U.S., China to the U.S. West Coast, and China to the U.S. East Coast, as a result of some tweets from our president yesterday, some of you may know of. As we can see, on May 1st, carriers were able to implement a GRI. On the East Coast was about $400, and to the West Coast was about $50. Then quickly, rates dropped to the East Coast around $200, just showing that there's not quite as much demand as ocean carriers had hoped. So those rates are stabilizing around $29.30 for East Coast and $15.50 to the West Coast. There's a couple things to watch on this lane. Obviously, the trade war potentially being reignited. Another one is the Panama Canal experiencing a drought, restricting draft sizes of vessels moving through that canal.
Thank you, Henry. Appreciate it. I guess I should say Hammer and Hank to make the baseball analogy be complete. So our ninth hitter is Nick Austin. Nick Austin is the chief meteorologist at FreightWaves. Nick has over 20 years of experience in his field, and for those of you who may be in the Chattanooga area, you're probably going to recognize Nick from his longtime experience as a television meteorologist. So this is kind of a high point for me in my life. Now I get to actually say, over to Nick with the weather.
Thanks, George. Good morning, everybody. It's no secret weather has a large impact on transportation and freight movement, especially extreme weather. We are expecting more severe storms. It's springtime, Midwest, parts of the Great Plains. That happens quite often in any given week across those parts of the country. But we have a great new fabulous feature called Critical Events on Sonar, and you can use this feature to show you what assets such as railroads, such as ports, and other features might be under threats for severe weather, and that's a particular problem today in the St. Louis area. The Port of St. Louis, as well as Union Pacific Railway, still having some problems because of ongoing flooding that's been happening in that part of the country for about a month. So that's the one kind of target area today where there might be delays in and out of the Port of St. Louis, as well as freight trying to get moved on Union Pacific Railway through that particular city in the United States.
Thank you, Nick. Well done. Appreciate it. Let's hear it for all of our market experts.